Good afternoon. Y'all can hear me? Gavin, you hear me clean, dude? Someone thumbs up. Nod your head. Give me
Yeah,
something.
you're
There we
good.
go. Thank you,
Yeah.
fellas. Appreciate everybody getting on. Excited to continue to help you guys with this annuity journey. Thanks for y'all. The thumb got them all. Give me if this is your first annuity call that you've been on with us at all, type of one in the chat so we know who's new versus who's been here. We continue to add people. Look at this shit, Gavin. It's crazy. All right, cool. For those that are new to it, if you haven't already, because some people see the marketing afterwards, if you go to johnwetmore.com/annuity, you can actually watch the previous videos, boot camps we've done. We did a podcast with John. I think I think we've done 3 prior boot camp trainings. They're on that site. Again, johnwetmore.com/annuity. There's a little button. You can say, watch the old ones. It'll take you down to watch them. And, at its core, what we're doing here as a group is continuing to help people get paid. I mean, that's always my mission, is to help people make money. It's worked out really well for the people who are making the money, and it just tends to work out good for us if we help people make money. So I just stick with that because it's simple. And the annuity space has been super lucrative, not only for myself and John Gavin, who helps. Tiffany, I see you on. Appreciate you getting on. We'll have her on as well. Someone else on the team that helps us out a ton. And, I see a lot of agents that skip this piece of the business because they feel like it's complicated and overwhelming. And for those that have been on for the last few weeks, you can see that we're making this thing as simple as possible. And there's been a couple handfuls of people who have already turned around, found annuity. We've closed a couple. People are getting paid already from them. So those of you that are like wondering if it's working, for those of you that are implementing the things we're talking about, it's working already. We're going to continue to help you guys with that. So again, if you haven't caught up, watch the previous ones. But in short, we're going to be going through the process of not only how to sell these, but more importantly, how to find them, the approach on them, the way to speak to clients about them. And for those that want the help, we have an option to where if like, hey, I got it all makes sense. I have no idea what I'm doing. Can you just help me close one so I can get paid? We have that option for you as well. Again, johnwetmore.com/annuity. There's a little form on there you can fill out if you're like, hey, I have a client. Can you just help me close it? John, maybe Tiffany, we're putting together a whole team in the background is going to get on with you, your client, help close the deal, and pay you half the damn commission for you getting to watch them do what they do really well. So if you're just like, hey, I'm not ready to do it on my own yet, I want some help, certainly we have that available for you guys. And again, you don't have to work here. You can keep working where you're working. If you have the carriers, great. You can still do splits. If you don't have the carriers, we can help you add them, and you can stay where you're at. This isn't like a we need you to be here kind of thing.
Hey, John, can I add something real quick?
Please, that's what I was about to ask. Go for it.
So I had a guy reach out to me 2 weeks ago, and he wasn't appointed, knew nothing about annuities, but he thought it was an opportunity. And
Yeah.
we got on a call. He got his appointment done. We wrote the annuity. It's still in process now because it's only been 2 weeks. But he sent me a text today that said, "Hey, I just wrote my first one by myself, and I got notified it went through suitability."
Hell yeah.
And I'm like, 2 weeks ago, 2.5 weeks ago, you knew nothing about annuities. And now he just wrote his first one on his own. So it's that
That's
sort
dope.
of thing that I love seeing, because that's the goal here, is to get everybody up and going, and helping people with their retirement accounts, but also helping themselves get paid. And it just goes to show how easy this process truly is, that here's somebody who saw it done once. And he was so new that we submitted it and he didn't have the right training done. So we had to have the application re-signed, and then it went through with it after he did the training. And then the next day he wrote his own, and it passed through suitability in the first day.
That's
So
dope. I love it, dude. I love it. It's we see that theme recurring over and over again. So those of you that are kind of sitting on the sidelines, if you, Amanda, will you share, or Reese, will one of y'all share the link to the questions? So Harriet, we're gonna answer your question with a graphic that we give out to you guys. You can download it, you can print it if you want, whatever. If you happen to come to my office for anything, we have copies here. But if you go to Amanda or Reese will put in a link to a Canva file that explains very simply the question, the steps that you're asking for. We have it on one. It's literally on like one 3x4 piece of paper. It's so easy. We can fit it on like a quarter piece of paper. You just have to follow it like exactly. If you change it, it doesn't work. So the question to ask the clients, the first step to this is identifying opportunity. And then again, if you need more from there, Harriet, if you haven't watched it already, because I don't want to get too deep on the stuff we already covered in the previous ones, go watch the previous videos. And then if you still need some clarity, feel free to reach out. It's just jw@johnwetmore.com, and one of us can get back to you and get you a little bit. Again, Harriet, so johnwetmore.com/annuity. If you go there, I'm going to type it in. If you go there, the previous videos are on that site for you. And then if you register, if you haven't yet, most of y'all probably register for my stuff, which is how you got on here. But if somehow you got on here some different way, if you just go to my main website and register for the newsletter, everything we do, we send out. Everything will be emailed. Everything will be posted. We share everything we're doing. So hopefully that'll help you. And someone on my team eventually will post that link. They're probably looking for it. We'll figure it out. We'll get it posted here in a little while. What you good research? Yep, they're working on it. They got me. Cool. John, I think what we should probably start with, I know you said you're going to go through applications, how to fill out an application, things we do there. I know you're going to have Tiffany talk in a little while too, because she's sold an enormous amount of annuities in her career. I want to give you guys the opportunity. If there's anybody in here, I'd be curious if any of you have started asking the question to clients that you've been sitting with, and you want to get some additional help, maybe share some feedback, some things you're getting, like how we would handle it, or if you found some money, just anyone who's like, we're just going to open it up for a few minutes. If anybody wants to be brave enough to get on and get some help from myself, John, Tiffany, on things they're trying, again, whether you're getting people to go, yes, I have money, but I didn't know how to get them to give me an appointment or how to give me their information a little bit more. If anybody has anything, literally just unmute or raise your hand or do whatever the cool kids do to ask questions in Zoom, and don't be shy. Is that you, Gavin, doing that?
No, that's not me.
Oh, dang. Steve Houston, you're sharing your screen with us somehow.
Remember when that one dude was taking notes on the screen or scribbling on it last week?
Yeah.
Oh, there he goes again.
Yeah. Interesting. Well, Reese is over here sliding
you
in.
haven't been hijacked like Dan and Tiffany were hijacked a few years ago. So
I heard about that one. Yeah. How do I make Steve stop sharing his stuff?
I don't know.
Anyway.
Stop. Following Steve just says stop right here.
There you go. Thanks,
Dude,
brother.
there's literally a button that said stop following Steve, and I clicked it.
Yeah, well, Reese did it for me. I don't know much. And thank God we have a team around to do most of the stuff we suck at.
So, John, I have a quick question.
All right. Who is that? Hold on.
Robert
There's so many people on the screen. Someone hopefully will put you on the screen.
Robert.
Go ahead, Robert. What do you got?
Robert Ariano.
Yep.
So, come from a brokerage side, always had VAs and just basic fixed annuities, but never had like a fixed indexed annuity. So, it's pretty new to me, even though I've been a broker for 11 years. So, what are a couple of just talking points for clients on that indexed fixed product that we have access to?
I'll let you take that, Gavin.
All right. Awesome. That's a great question. So, the FIAs that we provide couldn't be more different than what Robert was referring to. He said VA, it's a variable annuity. Okay. They're so different than that because a variable annuity is you're still exposed to market loss. There's certain things you can buy into to lock in and stuff like that. We're not invested into anything. Like a variable annuity, you still own mutual funds or equities or whatever, it's still in there. It's all internal. There's no investing in a fixed index annuity. You're just depositing your funds with an insurance company, and in return, you get to choose these indexes that you want to base your interest off of. But you're not buying those indexes. You're not buying into those. So therefore, if the indexes go down, you don't lose anything at all. But when those indexes grow, you get a certain percentage of the gains. So we don't have there's no fees involved in a fixed index annuity. There's rider charges that you can add to that to get something specific, but there are no fees. There's no fees. They don't fluctuate with the market. You don't have any market loss whatsoever. You don't actually invest into anything. You're just agreeing to have your interest applied based off of how predetermined indexes perform throughout the year. Okay. So they don't have the volatility. They don't have the high fees. I mean, I think the average variable annuity has like 3.5% in fees or something like that.
Yeah.
We have a lot that have zero. and then you might have a rider charge of 0.95%. So it's completely different because it's not an investment where a variable annuity actually is. You're invested into things where with an FIA you're not.
Gotcha.
Does
Thanks.
that help at all?
Yep, absolutely. Thank you, sir.
Yeah.
Cool. Yeah, John, I see your hand is raised. If you want to unmute, you can certainly fire away, dude. See if he comes. There you go.
Sorry.
Yes.
No, you're good.
Yeah, so thought that might be easier. Raise a hand. Hey,
Yep.
so I got a question. I don't have a problem getting into the conversation and getting interest, but when you get into the point of liquid assets, do you approach that before the application, during? That's where I got a problem.
Can you rerun that one more time? I
So
misunderstood your
on the
urgency.
app with suitability with the liquid assets.
Okay.
So as far as rather than just the numbers themselves or where they are, but that conversation itself, just getting into it, where do you approach that?
So you're talking about you're in an annuity application, right?
Yeah, well, I mean, do you approach that before you get in the application, during? How do you approach that?
Meaning the
I always
conversation about it?
I think I'm
I think
clear
he's
now.
yeah. I got it.
Yeah.
Cool.
So essentially, whenever I was running, when I was out in the field and I was running appointments, I did a full financial inventory with everybody I met with. And if they said that they, and it didn't happen very often, every now and again, I don't want to give that information. I just tell them I can't make a professional recommendation unless I know what we're protecting, what we have in place now. So I can't do my job unless I get this vague information from you. So I always have an understanding of what they had going into it. I think that it's important to do a financial inventory because if you're recommending life insurance, you don't know how much to recommend or what they have to protect unless you know all that stuff. So to answer your question in a roundabout way, John, is that I always had an idea before we even got to the point of the application of what life insurance they currently have in place, what else they have that acts like life insurance, such as IRAs, 401ks, stocks or bonds that would be transferable upon their death.
Yeah.
So I always knew those sort of things up front before we had the conversation of the annuity.
Do you try to shoot for 50% in your mind, or just wait till you get there to see if like per application?
Each situation is different. For
Right.
suitability purposes, a theme,
Mm-hmm.
if the annuity is under 100,000, they allow 60% of assets. If the annuity is 100,000 or more, they allow 70%.
Yeah.
F&G is a little bit different. They allow 75%, and they allow equity in a primary home to be counted towards liquid assets. So it's all dependent on what the client's goals are and what they're trying to do. What's that?
They do 75%.
They do 75%, and they actually include the equity in the primary home.
Oh, okay.
Say that again. Somebody just
Yeah,
asked me to
because
say that again. So, okay, so let me just go through this because part of what I was going to do today is go through a partial of the application, which covers suitability.
Yeah.
So maybe we can address that a little bit later on.
Yeah.
Yeah, because you know how they're sitting there, they might be talking to somebody about variable annuities at the same time with their advisor. And then they're just like, well, we'll just transfer the whole thing,
And if they have assets outside of that, they can, or household assets. If their wife
It's the
has,
same for okay, so it is the same for the variable annuity.
I don't know variable annuities. I don't write them.
Yeah, but anyway, okay.
Ask Robert. He did. Offline though.
Yeah,
Okay,
let's not.
cool.
Let's
Appreciate it.
Does anybody have one like, hey, I literally tried this with a client and here's where I got stuck. So I want something like during presentation, identifying. I saw who posted that.
Just sold
Nathan.
a vet that's 400,000.
Say again.
Maybe someone just sold a vet. Somebody that has 400,000 in savings.
Like it.
That is where I got stuck though. I was moving like 450.
And where did you
get
get
a friend
stuck?
of mine. He's just like, hey, just move this. I just want it moved. Like, but I can't move the whole thing. Anyway.
Oh yeah. Well, we can always move. I mean, just for suitability purposes, we could always move partial, just whatever, just to make it fit suitability and whatever the requirements are.
Appreciate it.
So,
Yeah.
So we've got another question here. How does an FIA stack up against a 401k? It doesn't. I mean, it's like, how does a horse stack up against a dog? They're two completely different animals. The 401k is completely different than a fixed index annuity. 401k has fluctuations with the market. When the market is gaining, everyone's celebrating. And then when the market takes a hit, people start crying and start getting worried. Our products are meant for people that are retiring or have at least retirement in their sights, to where they want to eliminate all the volatility of the market, eliminate all the risk that comes with that, secure their retirement account, get a bonus that puts you up ahead of that, and still get a fair return over time. So a 401k is a completely different animal than an FIA. Does that make sense?
Yep. Love
Yeah.
it, dude.
So let me, can I,
Yep.
do you want to keep asking
anything?
questions? I want to introduce
Nope.
Tiffany real quick.
No, go for it, dude.
Okay.
Get it. I'm ready.
All right. So there is actually a lot of new people on here today. I saw that, which is awesome. I asked Tiffany to get on here because her and I, we worked together for a long time, years and years and years and years. And we work really well together. I think she's the best trainer that we have on annuities, just to keep it simple. And I love the fact that, she's always an advocate for her client and putting her client in the best position possible. And I don't know that anybody that's gotten more referrals on annuities than she has. And one of the things that, John, when I was telling you I was bringing Tiffany on today, I think that's really important because I did a training with 100 and something agents earlier today. And that I got asked probably 7 times, how long do you have to be in the business before you can write an annuity? And I kept telling them that you don't. I actually had an agent before he wrote life insurance.
Yeah.
He got appointed with us. He got his license. He got appointed with us. His girlfriend worked at a bank, and a guy walked in there and said, "I'm looking for a fixed index annuity," and they couldn't do it. So she called him up and said, "Hey, can you do these?" Not a joke. He wrote his first annuity before he wrote a life insurance policy. It was $1 million. The guy had $1 million. He was dead set, knew exactly what he wanted. He walked in his bank, said, "This is what I'm looking for. Can you do it?" He happened to ask a teller who had a boyfriend that was licensed with us, and he wrote an annuity before he wrote a life insurance policy.
Awesome.
So
that changed his career a little bit.
So his commission was, I think it was 55,000 that he got on that, non-chargeback. Well, he didn't charge back. So yeah. But the reason I want to have Tiffany, well, I was going to have Tiffany on anyway, just because I want to provide another resource, another voice other than ours to talk about the simplicity of these and why it should be such a big part of our business. But also, you and I were talking earlier, and Tiffany blended with the question I got earlier. She was taught from day one to write annuities. And she comes from a place that they taught it from day one that we write annuities and life. And so I think that's the one thing that we failed at, is getting people going on life insurance and not letting them know that, this is another key part of what we do from the beginning. And that's where she was. So I just want to get her on, kind of talk about your background a little bit, talk about how you got involved in annuities. And I know that, I think she's probably, over the last 5 or 6 years, I think probably 12 to 14 million in volume. Pretty consistent. Gets a lot of referrals. I think all of her business now is coming from referrals. And she taught Dan to write annuities. Dan's one of my closest friends, but he is so old school on everything he does. And so I would say that a lot of his volume is actually his wife helping him, because he's doing about 1.6 a year now too. So Tiffany, thanks for coming on. Just kind of give a little bit of background on how you got started and why you thought annuities was such a big part of your business early on.
So thank you guys for having me. Super excited to be meeting everyone and helping out. I think the reality of when I started in the insurance business was the origination of my career was I worked with a company that looked at it really holistically. So they just looked at every aspect of a client's circumstance. And I think, again, when we're just looking at life insurance, we kind of sometimes will miss that. And I agree with you, John. I think that's happening a lot. So it really is fairly simple to integrate annuity volume into your business. And it just starts simply, where I like to ask my clients, okay, guys, what happens if one of you doesn't walk in the front door? Tell me what that looks like. Tell me what happens there. And then you can start talking about income loss. You can start talking about, what do you have that is beneficiary designated? Your clients will say, what does that mean? Well, what do you have in your life, in your assets, that's going to come directly to your family It's not going to have anybody fight over it. It's just going to come to you or to your loved ones without anyone caring. So that's when you start to say, and they'll say, well, what do you mean by that? Well, what about any insurance currently, any life insurance currently, any 401ks, stocks, bonds, mutual funds, significant savings, CDs at the bank, anything like that, guys? Right there. And by the way, this is a question we need to be asking in every single appointment that you run. Okay, so do you see how I wasn't aggressive about wanting exactly the dollar amount inside their bank account, inside their 401k? I just said, what do you have? Do you have anything like that? And let's say, oh yeah, I have some of those. Perfect. Now is that in a brokerage account? Or no, it's a 401k. Okay, perfect. Ballpark, what do you keep in there? Ballpark, what do you have in there? So again, I'm not being very aggressive. I'm just opening up the door for conversation, because if I'm going to make a recommendation about the balance of their life insurance death benefit, I need to know that. If they have $8 million in a 401k and I want to sell a $5,000 final expense plan, that's probably not a good use of my license in that home, right? So this is how you start that conversation. You just make it simple. The other thing about the annuity, I think that really gets confused. The first piece of insurance I ever wrote was an annuity. Client had $25,000 in a savings or in a CD that was earning 1%. And it was a simple thing to just give her the opportunity to earn more money. It's just basic math. If you have a client that is in a position where they can lose funds, or if they're in a position where they have funds in a savings account that's losing money every day because it's not keeping up with inflation and earning for them, it's your responsibility to offer them the product that you're licensed to sell, right? Like if you leave someone's house and you didn't write life insurance for them and they died tomorrow, nobody gets a check. That's on you, kind of, right? So you got to think the same way. If you sit down with, Joe and Betty, and they have 100% of their funds in the market that's 100% volatile, 100% up for risk, and you never even open the conversation to say, John and Betty, what if I could show you a way to make sure that you were still capturing great gains with the market, but you never lost a penny? I'm sure you'd be interested. So those are the conversations to have with your clients. And I think, again, the idea behind the annuity gets really clouded because there's a lot of, opportunities for different fiduciary products that we're not licensed for. So you just have to keep it simple. It's an insurance product. If you're selling any kind of insurance product, life, health, P&C even, and you're licensed to sell an annuity, it is an insurance product. It is X and Y. A deposit is made into the product. You use the product while you're living. You die, it goes to a beneficiary. It's a beneficiary designated product. It doesn't need to be more complicated than that. I always like coming into these rooms because there's always a lot of 1% questions, right? What if, right? So I want to challenge everyone to stop living in the 1% and get out here with the rest of us in the 99, because your clients don't care about the 1% question about what if on Tuesday at 2:00, the market falls by 1% and then the next day it goes up by 4%. What happens to my money? They don't care about that question. What they care about is, I'm 72 years old right now. Am I going to have money when I'm 80? That's what they care about, right? So when you're having these conversations, and start right away, guys, you have a license to help people with this product. You have the ability to have very simple conversations with your clients about their money. Do you want to lose money? No. Excellent. Are you a spender or are you a saver? I just want to make sure that money is there. Perfect. What is your plan when the market falls by 40% and you lose 40% of that? Well, I don't want to think about that. Perfect. Let me show you a way that you never have to think about that again. Right? So it's just a matter of really starting to ask the easy questions, right? They're not difficult questions. We make them difficult. I think as agents, we make them very difficult. And I think it's just simply because we overcomplicate a very simple product. Like if you're starting life insurance, it's not difficult, right? We're not rocket scientists. It is basic. You write me a check, the insurance company writes you a check when you die. It's very simple. It's a very simple product, right? The annuity is also a very simple product. It allows you the opportunity, the FIA allows you the opportunity to grow when your index market grows, to put a padlock on that gain, and then you never lose it. So your interest earns interest, right? Compounding interest is a fantastic thing. Even Ramsey will tell you that, right? So it's just giving the clients the power to understand their retirement. So this is the other thing. 50 years ago, we had every major company in the top Fortune 500 in America offering pensions. It was just part of what came with your business. Then we transitioned into the 401k world. Now people want to go back and have a pension. They feel like they need that security. Building an annuity for someone or giving someone the opportunity is giving them the opportunity to pay themselves for the rest of their life, just like older companies used to do. And they will assimilate with that. You just have to have that conversation. Do you want to make sure that your retirement looks the same when you're 80 as it does right now? And those are, like I said, it's just a matter of having that conversation in every single house you go into or in every single client that you call. How are we making good recommendations if we don't know what their asset base is? How are we doing that? Like, I always think that that's an interesting dynamic because we see, so many clients out there on a daily basis with as much volume as these companies are now doing virtually. This is a conversation that needs to be had every time because you may be the only one who ever talks with them about their finances. People will have, Dan just sat down with clients that had $485,000 sitting in a bank account for 2 years. They've earned $300 on $485,000 because nobody ever talked to them about any other opportunity. They're very conservative. They want their money to be safe. They didn't know that this existed and that they had the opportunity to continue to protect their money, to continue to have access to their funds, but earn real money, real gains, and then never lose them. So these are just conversations, guys, that you can start having. And in your financial inventory or your fact finding, whatever you call it, it's just a simple conversation. What do you have for insurance? Health coverage, you have any long-term care, anything like that? Okay, perfect. And then what do you have that passes to your beneficiaries when you die? Anything like 401k, stocks, funds, mutual funds, brokerage accounts, significant savings, or anything like in CDs at the bank. So if you say that to your clients like that during your initial fact-finding process, you've already disarmed them. All these questions that you guys keep asking about, what if the client says this? What if the client says that? You've already disarmed that if you come at them from the beginning, like, this is part of what I do. I'm licensed to help you with your final expense, your mortgage protection, your traditional life insurance, and any kind of retirement income planning questions that you have. So if you can start doing that and just going from the get-go with that type of assumption into the fact that that's what you're there for, your clients will be put at ease. You will find yourself being in positions to have conversations about money and be confident and comfortable about it. Because that's, by the way, that's all your clients want. They want to talk to someone who understands money, who's comfortable with money, and who can give them good advice. By the way, you don't have to have any money. That's always, people are like, well, I don't have a 401k. How can I talk about it? That's okay. That's okay. It's just simple, basic things. Can you take your client from a position of loss where they have the opportunity to lose money and put them in a position of strength where they can't? A or B, can you do that? And if you can, then let's start having real conversations with your clients about what you're licensed to help them with. Does that make sense?
It's dope, Tiffany. I love it. It's me and Gavin are texting behind the scenes like, dude, some of these word tracks, Like if people aren't taking note of these little details, man, that's where it's at, you know? And it is simple. I remember learning this thing and thinking it was complicated. And once you figure out a few key things to say, the rest are pretty easy, actually.
Yeah, for sure.
And I know John's going to kind of jump into that a little bit here as well
Yeah,
to sort of show some of the process.
yeah. I just want to touch on a couple things that Tiffany had said there. Is you know, we can think of the 1% problems all the time and have that trip us up, but
Yeah.
you don't get asked those the objections that you come up with in your head don't come out in real life because your clients aren't concerned with that. They just want to talk to somebody who's confident. They don't want to lose money and they still want to gain some. And it's that simple. And this is exactly
Hey,
what our product does.
you know,
And
go ahead, John. Sorry. Keep going.
I was just going to say, if you know, for I get asked a lot, well, how do I ask that question? If you just heard the way Tiffany said that, it's so disarming. It's just the way she said it, and it's
Yeah.
all ballpark and round figure, and what about this, and related to why we're talking. That I guarantee, I don't know if she's ever gotten an objection, but I'm sure she hasn't gotten one in 9 years in asking those questions. You know,
Yeah.
you only get
Yeah.
an objection if you're weird about it, you know, and if you
Yeah.
can find a way just to ballpark and just slowly work your way into that and ask that question kind of like how she did and disarm them, you know, it's
Yeah.
awesome.
It's funny. It's like it confirms that when I started out with like, hey, anybody doing the questions and getting the feedback, the only questions were the what if stuff. It wasn't any
Yeah,
like, hey, I talked to Mary and she said that. Like we opened up the floor to give them the opportunity to tweak those things, and
yeah,
no one had any.
yeah,
You know what I mean? Because it's either they're not asking or they do ask and they don't get them.
yeah,
Does it make sense?
yeah,
It's like you just saw it happen here. The only questions are typically from, the ones that are afraid to make the move. And again,
yeah.
you can't get worse than it is now if you're not selling any.
Give it a
Yeah.
shot.
Yeah.
Just give it a shot and start asking, see what happens. I guarantee you that a dart's not going to get shot in your neck and put you down. So you've got
That's
nothing to lose just by asking the question, see what you can uncover.
that's probably pretty
So
accurate,
John, can I
dude.
add to that?
Yeah.
So
Yeah.
I think part of that fear that agents are having was they genuinely feel like if they go down or come anywhere around that, they're going to lose their life sale. That's why they don't ask.
Correct.
And that is so far from the truth. It literally, it will solidify your life business tenfold if you have that conversation. Because number one, your client's going to understand that you're actually doing a good job on the big picture of their life and not just looking at the snapshot in front of them. They're also going to feel like you're educated on what happens when they die. And that's important. You're selling life insurance. And it gives them the opportunity to understand that you are not just a slam bam, thank you, ma'am kind of agent. You are there to help them in the big picture of things. It will solidify your sale. It will not destroy it. I promise you. It will help. It helps.
And if I can add to that, I think part of the hesitancy is people think that the client's going to turn to them and start asking them all these questions that they don't know the answer to. And the best thing you could do is be like my 17-year-old daughter who deflects everything. And it's just like, hey, I don't have any time for that right now, but I'll tell you what, 6 o'clock on Tuesday, it's going to take about 10 to 15 minutes. We'll get all those questions answered for you. And I mean, you can just deflect. I don't have time. We've got meetings to go, want to get you that information, answer all your questions on Tuesday, and then go ask for help. And one of us will help with everything. And you get to learn that way by seeing it, you know, real time and being applied. And I think once people see the buy-in from the client and how happy the client is and relieved that they found a place they can put their money, they don't have to risk losing it and still let it grow. I think that's when their real buy-in from the agents happens, when they see the buy-in from the clients as well too. We went over an illustration last time, and I want to go over part of an application here. It's now that I'm not going to go over the online. Everything we do is online, except for someone I know is paper apps. You know, but all the apps that we do are going to be. It's not Tiffany; it's her husband. He's archaic and does paper apps, but everything you do is going to be an e-app, and you can't mess it up. And so a lot of people think these products are so difficult that the application process has to be incredibly difficult. So I downloaded an application. I want to show you the application part of it and also suitability too to show you what that looks like, because there are no health questions. There's no health. These are not health related products. You don't have to worry about it qualifying health wise. I just want to run through this real quick here. Let me see if I can do this right the first time. I think I can. I think I can. I think I can. All right. Awesome. All right. So I am. Can I color on this one? I want to color on it. Hold on. I'm gonna have to download this. Hold on. Right now I can do it, but I have to stop, share, and then start to share again. This. All right. So this is with a theme, and again, this is a paper app. You can't mess up the e-app because it tells you what fields need to be filled in, and it'll have a certain percentage up here. And until it gets to 100%, you can click on a red thing. It'll show you what steps you miss. And I don't expect people on their first try to even be filling out the application. I'm just showing you the information they're looking here and how simple this actually is, right? So, okay, this is a with a theme. So they're gonna ask you the product name. You actually have to click on the product name before you even get to the e-app. And I'm gonna refer everything to the e-app. I'm just showing you the paper app to show you the different components of this, okay? So you're gonna have the owner. The owner is gonna be the annuitant as well too. That's the person that is actually rolling the funds over or into it. Has their basic information there with their name, address, security number, da da da. So it ties it directly to them. If there's a joint owner here, it doesn't happen too often, but we do have joint ownership. The annuitant, if different than the other, this box doesn't even come open on the e-app unless you actually say that it's different. So all we're doing so far is we're entering the owner, who is the annuitant. Do they have any life insurance in place now? Do they have any? Are we replacing anything? No. Super simple stuff. Then we get to the beneficiaries. So who are the beneficiaries? Who's going to get the check? Who's going to get the funds that are left over when this person passes away? Same thing we do in a life policy. We're just adding the beneficiaries. You can add multiple beneficiaries. You can add contingent beneficiaries. That, I mean, it's pretty self-explanatory, same as a life application. And then here's where it gets just a slightly different. You know, where are the funds coming from? If it's cash from a sale of a house or money that's sitting in their checking or savings account, that's going to be non-qualified. If it's a 401k or an IRA, that's going to be an IRA. And typically those are going to be traditional. So we're just checking that box there. If it's inherited, you got to answer this information here. And then you're just entering the amount that it's going to, that we're rolling over. Okay. Well, it's not going to be a new person, be direct or transfer rollover here. And then it just adds it up here. It's that simple. So far, all we've done is add the client's name in, the beneficiary of who it's going to go to afterwards, and what type of money are we moving, right? Super simple. And then I haven't seen a paper app in so long. And then that part gets signed at the end there. That's the application part. And so for suitability, so there's no medical underwriting, but for suitability, you want to make sure that the way I always explain this to clients is that, you know, we have a suitability underwriter looking at this, making sure that this is the right product for you based off of what your goals are and what you're trying to do here. So the owner information will auto-populate. You know, what is their source of income? So now we're going to ask some financial questions. And again, this is just to make sure that the client doesn't have to go into a situation where they have to withdraw more than the free withdrawal amount, which is typically 10%. Okay. Doesn't mean they can't do it afterwards. It just means that we want to set them up in the best way possible, that they have funds outside of the annuity, that they don't have to withdraw more than 10%. So where's their income coming from? Are they retired now? So retired, where's retirement? So if they're getting a pension, you just mark it here. If they're getting Social Security, you just mark it here. If they happen to be still working, or if their spouse is still working, you're marking this one here. What's their tax bracket? We don't know. I mean, I don't think I've ever marked anything other than 12 or 22. It's not an exact science. We're just putting that information out there. We just have to kind of guess what their tax bracket is. We don't know. Are they going to see an increase in living expenses, decrease in annual income, or a decrease in liquid assets? Hopefully not. Basically, are they financially, is their finances stable? So we just mark no on those. And then what is their experience with financial products, including investment, annuity, and insurance holdings? Most people are going to be limited to moderate. We don't get moderate to extensive, or if we do, they're managing their own funds. But middle America, the 1% that we work with, are either going to be none to limited or limited to moderate. And this doesn't really have a bearing on suitability, but they just kind of want to know what is the extent of their knowledge on retirement accounts. So next here, what is their risk tolerance? Are they conservative, moderate, moderately aggressive, or aggressive? So with our products being built off a foundation of safety, which one of these do you think is not a good idea for our products? It's going to be the aggressive side. If somebody's aggressive, they want an explanation on why is someone with an aggressive risk tolerance putting their money into a safe product. So most of our clients are going to be in the conservative side, moderately conservative, and even moderate. But most of them are going to be right in here, moderately conservative. What moderately conservative is, in my mind, and I haven't looked at a definition, is that they don't want to lose money, but they still want to gain. And that's what our products do. We don't lose anything at all, and we gain when the markets gain. Okay. Is any of the premium intended for this coming from a reverse mortgage? No. There's certain stipulations. I actually haven't come across it yet where they were, but typically that answer is going to be no. And where are the funds? Are the funds coming from any one of these things? 401k, pension plan, and there's just on the e-app, there's just a box like right here. We just check yes. Not a big deal. Okay. If you're moving more than 250,000 from a checking account, they just want to know if there's any penalties on anything we're moving or where the funds are coming from. What is the origin of the funds that are coming from 250,000? Was it from the sale of a business, a house, or is it something they just accumulated over time? Are any of these funds purchased annuity from a replacement? So they want to know if it's a replacement. And why is that important? Because we're so highly regulated that if it was coming from a replacement of annuity, we have to show that we're putting them in a vastly better position. We need to show them that the annuity that we're suggesting today is a lot better than the one that they had previously. If it's a variable annuity they're coming from, it's the easiest thing to show that this is putting them in a better spot. If it's another fixed index annuity, because the annuities have evolved so much over the last few years, most of the time that's not going to be an issue whatsoever. The only time it gets difficult to replace an annuity is if they've had it for a while and they've activated the lifetime income rider on it, if they have one. Okay. And I'll get into that at a later date. The annuity company does not want to see them take a loss of any sort. And if someone has guaranteed income turned on, that could be seen as a loss if we move it to a growth annuity. Hopefully that made sense to most of you. All right, so now we get a sort of what we were talking about before is they kind of want to get an idea of what their liquid assets are and what their non-liquid assets are. So on the household liquid assets, and if they're married, this is going to be their joint, okay? What do they have in their checking and savings? They have to have something. They have to have, each company's a little bit different, but they have to have about 4 months, sometimes 6, but usually 4 months worth of their monthly bills in immediate checking and savings. Okay, so what's a liquid IRA? A liquid IRA is if they're aged 59 and a half or above. Why is that different? Because after 59 and a half, they can actually access that tax or penalty free. Okay, do they have any CDs? Do they have any 403Bs? Do they have any stocks, bonds, mutual funds? Do they have any annuities out of surrender? Again, if they're age 59 and a half. They have a 401k, again, age 59 and a half. These are all liquid. Do they have money markets? They have cash or precious metals. What's on the non-liquid side? Cash value of a life insurance plan. An IRA, if they're under 59 and a half, why is that not liquid? Because the IRS will penalize you 10% for any withdrawals if you're under age 59 and a half on an IRA. How much equity do they have in real estate? Exclude primary residence. What about 403Bs here? Again, all under age 59 and a half makes it non-liquid. And so it's a combination of all these things. And you don't have to add this up on the online application. It adds it up for you. It asks what their total debt is. And that's excluding mortgage and primary residence and automobiles. It's mostly what do they have in credit card debt? What do they have in student loans? What do they have in motorhomes, motorcycles, that sort of thing. And you want to subtract that from, well, the actual, the online application does it for you. We'll subtract that from their net liquid assets. And then you enter their total annual income between, if they're married, both parties, both spouses. What are their total annual expenses? You want to make sure their expenses are lower than what their income is. And do any spouse or domestic partner have any of the following? Any Athene annuities, other pending Athene annuities? They want to know if anything else is pending with them, because they're going to look at both suitability forms and make sure that they line up accurately per household. And then if the answer is yes, then you have to put their information down there. So why are they purchasing this annuity? What's the reason for it? Most of the time, you're going to see accumulation and growth and principal protection. It could be passed on assets to others as well too. Indexing options could be one, but I just typically stick with these three. Keeps it really simple. Added riders, you don't have to do anything there. This product doesn't come with any riders other than the enhanced liquidity. You don't even know anything about that right now. And please provide the disadvantages. So we have to talk about the disadvantages as well too. What are they? Well, you've got surrender charges on any withdrawals above the free withdrawal amount. I don't know if I've ever clicked on anything other than just that and let it go. I mean, partly because I have ADHD, and when I first started doing these apps, we did paper apps, and I want to get through them as fast as possible. I knew that the surrender charge and the withdrawal charge term would satisfy everything, so I just clicked on that, and I've never done anything different, and all my apps go through. So that's really it. There's other questions on the application, but the meat and potatoes of what we do is we're identifying who the client is, putting their personal information in there, identifying who the money's going to go to when they finally pass on, and then entering just this basic information of what kind of assets they have. They want to know, they want to make sure they have enough assets outside of the annuity that they're not going to have to withdraw more than 10% or 5%, whatever the free withdrawal period is, or the free withdrawal amount is, and have to pay to access their own money. So there's no health questions on this. And the rest of the application, there's some other, I don't want to call it housekeeping stuff, but it's more administrative. It's your information, it's your account number, it's how you get paid commission and everything. So when people think about how difficult these products are, that is 90% of the application right there. You don't have to put when their last doctor visit was, who their doctor is, what they were seen for, what the medication is, how long they took their medication for. There is no health questions on here whatsoever. That's it right there. You identify who they are as a person, who the beneficiaries are, and then the majority of that is just the suitability part of what else they have outside of this annuity that they can access, so they don't have to withdraw more than the free amount. Does all that make sense? Okay. Were we getting questions, Steph, on that?
There's day, John.
Yeah.
I actually have a question, not on the application itself. So I think you guys have mentioned some people who get, well, most people right now, they get like their clients from referrals. And obviously for us who are selling, those final expenses or vet leads, being able to actually like approach those customers at the end of calls. But what other ways would you guys recommend to actually be able to just solely target someone for like an annuity, like to be able to find that funnel?
So can I take that one?
Yeah,
Because
please do.
almost all of my business is referral. So what I would do if I were you, Cameron, I would find your book of business, right? You guys hopefully are keeping good track of your book of business. And I would work, with myself or John and get a script that you start calling your clients back with, in the aspect of, hey, Mary, this is Cameron. I helped you with your burial plan. I did want to let you know that one of the things that we do offer as well, and we typically talk about this however long it's been, 6 months, 2 months, 10 months, whatever. We talk about this about 6 months after your final expense plan has been enforced. We do offer the opportunity to review your retirement income and make sure that you're in a solid financial position, and make sure that those funds that you're receiving in your retirement are going to be there forever. Now, you did mention before, I believe that you had some sort of pension. Was that in an IRA, something traditional like that? Are you supplementing your income with savings? And so right there, right, we've opened dialogue with your clients that you already have. So that's how you go back to your clients to say, hey, this is something that I offer. I didn't offer it to you right away, but I am licensed to talk about your retirement income. So let's open that conversation. So many of my clients, Mary, have questions and they just don't always get them answered. So let's spend about 10 minutes. You have time right now? We can go over just some of those options that you might have that you weren't aware that were out there to you. Does that make sense, Cameron?
Thank you. It's Yemi, by the way.
What was that?
I said my name is Yemi, but I appreciate it.
Oh,
Thank you.
hi, Yemi.
It keeps saying Cameron.
It says
does.
Cameron on it.
Yeah, it says Cameron
right
Bunce.
there.
Does it say
Logged
Cameron?
in as Cameron,
It
bro.
does.
You're logged in as Cameron Bunce or something.
That's wild.
Yeah.
Yeah. Yeah. So, and I think part of the first, did you ask in the beginning, non-Cameron, how do you, because you're doing final expense and vet leads, right?
Yeah.
Those are, every person you speak to is a perfect opportunity, because vets, you know, if they were in the military, they were given a TSP account and they contribute to that. And so the TSP account is going to be a thrift savings plan where they contributed to it while they were active military. And then once they left to go in the private sector, that TSP usually just sits out there and no one manages it, no one takes care of it, and it just floats around with the market. That's a great opportunity to reach out to those people and see what's going on with their TSP account and see if they want to secure it and let it grow, and you can get a bonus on top of it from where they're at right now.
That's awesome. I didn't know that. Thank you.
Yeah. Yep.
Now we know one of the acronyms because they're all confusing.
Yeah, they are. You know, the 401k, 403b, those are all tax codes. TSP is a thrift savings plan. That's a government retirement plan. And in military are perfect people, because I just did one a couple months ago for a couple. They were both 30 years old, and they both had about 130 to 150,000 each in there. And it just sits there and no one manages it, because on their way out, it's not like they're 65 years old and they met with a retirement specialist. They're 30 and just got out of the military. You know, so they're not thinking retirement. They just have this retirement account and nobody's managing it, and it's just fluctuating with the market and having fees chip away at it.
I love it. I love it. It's good stuff. Yeah, as y'all continue to have questions, I'm gonna give it, and certainly open it up for y'all answering if you want to browse through those questions, Gavin, if there's anything else you want to answer. But as we start to do more and more of this, those that are looking for help, again, there's a form on the website, just johnwetmore.com/annuity. You can fill it out, say I need some help. If you have a client, great, fill it out. If you just have a question, certainly you can fill it out if you want, and just there's a little note section you can ask in there. Or you can always email directly at jw@johnwetmore.com. We're doing our next one, Gavin, which I think you're going to be under some heavy sedated surgery stuff.
Yes,
so
I'll be on fentanyl.
Yeah, it'd be good. It'd be good. I would like to get you on live during that, just for fun. It would be really good. It'd probably be the best one we did. But Tiffany's going to help out. Correct me if I'm wrong, Amanda. I think we said March 3rd at, did we say 3 Eastern? Amanda will type it in. Oh, she already did it. Shit, she typed it in before I finished the sentence. So the link below, if you want to register for the next one, it's always available on the annuity page and obviously in our newsletter and stuff. But if y'all want to register now, she just put the link in. For those that are coming to our event next week, John will be flying into Atlanta. For those that don't know, we're having a 2-day workshop in my office, Metro Atlanta, 27th, 28th. If you go to johnwetmore.com/workshop, you can find out more. I know Karen and some others on here are coming to it. We're going to be going over not only annuities in depth and certainly be able to give you the opportunity to converse and have conversations in person, but we're going to be going through a full 2 days of sales stuff and building and systems and recruiting and everything we've done to help people grow and scale in the business. So if you're interested in coming, again, johnwetmore.com/workshop, and you can come out and hang with us next Thursday, Friday. We're going to be doing some cool stuff. My team's been working on it like crazy to make it a great event for everyone that attends. So anything you want to end with, or any of those questions you want to tackle, John?
There's a few questions I'll fly through real quick. So what are the different types of accounts that are eligible to be moved into an annuity? You know, if somebody has a 401k and they're separated from service, a dormant 401k they've accumulated and left that company, it's easier to say what can't be. What can't be is a 401k that they're still working at that employer and still contributing to it, because the employer actually has control over that. So somebody of working age that has a dormant 401k can be moved into it. An IRA, if they have just an individual retirement account they've set up separately. We do a lot of sale of homes where they have large cash amounts, those sort of things. Then it says what else is too ill to start? I mean, annuities up to 80, probably you can do a few more over that. But, you know, if I just had somebody call me today about somebody who was 88, and I don't think we have any 88-year-olds on the call, so I can say this, but 88 is sort of like soccer overtime, where you don't know when the end's coming, but you're a little, you know, that whistle's coming soon. So the only real way you can get a charge back if somebody dies in the first year, and you just don't want that whistle to go when somebody's still on the field.
Happen any second, and no one
Yeah.
knows. That's great, dude.
So, all right. So we got
My Lord.
that. How do we access the recording of this meeting? John's got that. It's going to be on the John Wetmore. It's .com annuity DDD, whatever he does there. He's got that. Would a VA service connected disability income count as a pension? It doesn't matter. I mean, it doesn't. And that's the 1% question that we get there. See if they have any funds outside of that. We might be able to roll over, and then we'll just address that if we have to. So someone who is kind of living paycheck to paycheck and wants to protect their retirement, that's in 401k, but don't have 6 months of bills. That's actually a really good question, Nathan. Thanks for asking that. So what we do is say they have $100,000, we'd roll 70 of it and leave the other 30,000 there that would still be liquid. Okay, that would help that pass suitability. We don't have to move the entire account. A lot of times we don't. So for suitability purposes, we have to leave some in the account behind. We do that. I think you do not have to be in the same state. You have to be licensed in the state that you write it. Oh, somebody else answered that. Thank you. What if I book a seminar in the Medicare industry? Somebody wrote, what if I have a book of business, 700 clients in the Medicare industry? I would reach out to every one of them and they're all 65 plus. So that is actually who we're trying to get a hold of. And you have a book with all their contact info on there. And if they're clients of yours, you've already got that rapport built with them. My top agent, he wrote 10 million in annuities last year. He issued 10 million in annuities last year. And a majority of it was running Medicare leads to get in front of Medicare clients. So that's how good that book of business you have there.
Hey, John.
Yeah.
If what do you think a number would be just for fun? Like how much annuity volume you think she would find if she called all 700 in the next 90 days? Just roughly, what do you think she'd find? Tiffany's dying over there. How much?
2 million.
2 million?
Yeah. I think 2 million is a good, easy.
Yeah. Imagine that.
Yeah. Yeah.
Time to get to work, Lynn.
Yeah. That's a golden opportunity. Hey, I'll buy that book from you.
I was just gonna tell her to send it. I wasn't even gonna buy it. I was
just let me see that book you got there. Yeah. Yeah. So I think that's all the questions. I think the biggest thing now is just none of this matters unless we put it into action. You know, you guys got to get out there. You got to start asking the questions. We got to start coming up with more opportunities. And you got, Tiffany and I are more than willing to help you guys out. And you'll just learn along the way. And I think once we get more people closing these and seeing how easy the process is and getting paid on them, it'll all just take off. It always does.
Oops, I sent that to the wrong person. Hold on, I'm trying to answer. I sent it to one person instead of everyone. There we go. So the one that asked about the script, it's so simple. There's not even really a script. It's literally just a question during your financial inventory.
Yeah.
So who asked that? Harriet. It's again, there's a link there to a sheet you can print out. It's just one question. Literally, it's the simplest thing to find. And then again, the second question is like booking the appointment later. But start with that. And again, if you haven't already watched, go watch the previous episodes. It'll fill you in with all the information we've covered on each one. We're going to continue to make these things available to you guys. If there's any questions between now and then, feel free to DM me or hit me on school or wherever the hell y'all follow me. Just hit me up. I'm obviously not that hard to find. So if you have questions or need help along the way, just reach out and ask. And if we need to connect you with someone on the team to help take it a step further, get to the next level, we will. If there's anything you want us to cover specifically, there you go. Look at this. Look at this. They created Annuity at johnwetmore.com. Who knew? See that shit? So if you have questions, email that. My team will see it and handle it. And anything we can do to help y'all make some more money, please let us know. And otherwise, we'll see you guys on the next one. And look forward to seeing you guys, dude. Appreciate John and Tiffany y'all getting on as always.
John, real quick.
Uh-oh, you got it. You barely made it, bro.
Sorry, this is Bo Kelly. Hey, I have a question. Do you guys have a video out there? Is there a video you recommend for if I was to try to explain what an annuity was to my 16-year-old little brother? Like just something very simple.
Yeah, that's our first one.
Yeah.
Didn't we do that in the first one? Yeah. I mean, it's literally just an interest-bearing deposit with an insurance company that eliminates all the risk from your retirement, but still grows when the market does.
Okay. Thank you guys for doing these.
Yeah. If you go back to watch the first one, I think that's what we talked about, what exactly an annuity is in its basic form.
And I have, I'm looking at YouTube and I'm seeing, I put in John Wetmore, but it's a John Wetmore what?
Go to johnwetmore.com / annuity.
Oh, okay. That's where everything is.
johnwetmore.com / annuity. It'll take you right to that page. My team will probably type it in here again. And johnwetmore.com / annuity. It's very easy. There's a button. You click it and follow it. There's 3 videos posted now. This one will get posted sometime in the next few days, a week at the most. It depends what my team's got going on, but they'll get this one up there as well in a few days.
Thank you.
We'll be a few days to a week behind posting them after editing them, doing all the work on it. But we'll get this one up there as well. And,
appreciate you guys.
Yeah, absolutely. Happy to help. All right, y'all. Appreciate it. Go kill it. Let us know if we can help in any way.
Thank you.
See you.